Turnaround Tuesday, everybody. How's everyone doing? Good morning to you, Patrick. Hi, Ziggy, William, Yasser, Bill Ford, how are you? Greg, Luca, how are you? So we got that announcement from North Korea, Kim, and we're still here today. Abdullah, how are you? Nick, nice to meet you. Okay, so I want to start off with a look from Nicola Duke, updated look on Canada, and she remains bearish. So her look is 2460 as being critical. This still could be a position trade, especially if all we're going to get is a little pullback in crude and it's on its way to 60. So looking for position trades between 460 and 550 up here. Give me a Y if you see it. Going to my charts on it. First of all, the crude. Here's a turnaround Tuesday idea if it sets up. Long euro yen, okay. Yeah, I was going to talk about that for a turnaround Tuesday. Thank you, Luca. So looking at crude right here, we have a 1, we have a 2. If we get a shot up towards 52.50, could be worth a scalp for a pullback at least to 1 1/4, maybe back to the breakout. So we're under 70 here. I'd like to see this high taken out. Everyone see this? So this is counter trend only. Counter trend only. That's a point, but it could be a scalp from 2.5. Everyone with me on that? So looking at what Luca's saying, I agree with him, and Greg also agrees with Luca, and I respect Greg's work very much. So we look at the yen, it looks like it still has a shot to make a move up towards new highs, although we could get a failure here. It's not high conviction to me because I do think the S&Ps might have some more downside left, but here's the euro yen that Luca's talking about. So we have a 2 driver here. Looks to me there's a lot of confluence, even if we're not going to go to new highs, for a pop back to 133. Okay, Jess, I'll take a look at EG because there is divergence on the 4-hour. Sounds like Blake has something to say right away.
No, I don't. Sorry, I thought I was muted. Go ahead.
Oh, it's okay, buddy.
I really had nothing to say. Go ahead.
All right, well, I know you have something to say. So, all right, anyway, this is Luca's shot. I think there could be a rally, a lot of confluence here. Jess wants me to look at EG. And I know why. It's because he's starting to see perhaps a little divergence here. We did not confirm the new low on the 1-hour here, and on the 4-hour, it's even more glaring. You have to consider this counter trend, and there are reasons to cover shorts. Look at your 4-hour chart. We cleaned out the lows. Pretty glaring divergence here. But yet at the same time, the euro's not giving me any reason to go counter trend. I agree with Blake's pattern in play to sell rallies for lower numbers. But when you look at the pound, really all we've done is move sideways. We're headed towards that buy zone that we've been talking about for quite some time, 34, 33.5. But look at this. With a big dollar rally, what's the pound done? It's near the lower end of the range. Is it going to break down? I don't really think so. I think that there's something, that there's another move to new highs in the pound. I think it's still possible. And when markets correct from overbought by just moving sideways, you have to think it's corrective and that the trend is still up. So I have a bias to the upside in cable, like the rest of the crew. Everyone with me on that? So the S&Ps I talked about yesterday, I showed the weekly, and I thought that we were due for a correction, not the end of the world, but maybe back towards 23, 2450 or so. So we're starting to roll over here a little bit. And the reason I wanted to bring it up is I really see something. I was talking with a new trader friend of mine that I'm working with, talking to Ken yesterday, and it's about the bonds. So, you know, we maintain a pretty bearish bias on the bonds, on the 10-year. Where it is. I had it up here before. Here we are. Here we are. Okay. All right. So this is the weekly on the bottom, right? Weekly. So even someone who is fairly new to technical analysis would call this a bear flag in the bonds. Everyone see this? So Steve and Grega would say this is impulsive. And this is, you know, we were on this. I think I talked to Blake. He said, what could make the dollar rally? I said, yields going up. So yields are going up. So I'd like to see more weakness in the S&Ps and then get positioned for a nice break to the downside. So here's your weekly. It measures pretty big to new lows. So what do we do here? Do we just sell it anywhere, or do we try and finesse some type of entry? And I'm with finessing an entry here. So if we can just get a continuation correction in the S&Ps, I'd love to be a seller in the bonds between 127, 127.20. It's already having trouble at 23%. But to me, this is going to be a great short, because the way I see it, we're going to be heading to new lows in the bonds, new highs in yield. So I'd love to see this is 580, 160 up here towards 2670 to 27, halfway back for a big short in the bonds. I don't really think it's too big, Eric. I mean, it is a weekly chart. It still has the form of a flag. So to me, it still looks like a continuation formation. I don't know if there's any rule about how long a flag would be. I guess if we keep stretching it out for weeks, it would be something else. But to me, still looks like a bear flag. And, you know, measures pretty big, right? 11 handles. You know, we'll take it down to 115. Let's see what's there at 115 on the 10-year note. You know, right here. So it's still very possible. In fact, when you look at the monthly, it's starting to look like a descending triangle. Here's your high, here's your second high, maybe we get a third high, but a breakdown under these lows measures pretty big, 35. So I'm a big bond bear, guys. So let's hope we get some more follow through to the downside in the S&Ps so that we get better levels to shorten the bonds. Of course, your risk is going to be above last week's highs or the week before highs. It's going to be above 28.20. So the closer we get to this high for risk management, the better. So that's something I wanted to bring up long term. And that would play into Grega looking for a pullback, and then, you know, 25.50 in the S&Ps. When that's happening from whatever level it occurs, if it occurs, it's going to be very bearish bonds. So that's my wrap on some of the things that I'm seeing here. So looking for maybe some scalps in crude oil. Really have Canada on the radar screen. Just wanted to show Canada before I hand it over to Blake.
So are you going to show us like Calgary or like Winnipeg, or what do you show us? 125.
So Montreal, where Adam Button is, Montreal. So I mean, this should be a very nice potential position trade setting up here between 460 and 5, maybe 5.5, to take us down one more time. Look at this 4-hour low here. So we do have a confirmed low. So that's something to me that says there's a possibility that this is not the low. So from Montreal to Scottsdale, Arizona, it's all yours. It's all yours, partner.
All right. So hey, I was just chatting with one of our traders in the chat room. He was like, hey, when should I whoops, hold on quick, grab the screen here. He was like, when should I you know, short the euro dollar, and I'm like, look, I can't tell you when to get in and when to get. It's not my job. You know, my job isn't to tell you, but I will. I'll tell you something. You don't chase. You know, if you chase the market, you're going to get hurt. It's just the bottom line. So, like, you look at the best thing to do, and you look at the euro dollar, which is obviously breaking lower. And by the way, I'm not short the euro. I'm so pissed because I thought I'd get cute last night.
Yeah.
I put in an order at 18.5. I get short, and we went to 18.1. Like literally, because oh, here, let me get rid of this, or let me move this. Actually came to almost perfect, right? Almost perfect previous support reason. They're going to probe it and kind of get above it, and I'm like, you know, I'll let them squeeze it just a little higher, and I'll put in my order at 18.65. I missed my order by like 3 pips, and then it went straight down. So, but you know, it would.
What's more aggravating, trading or golf?
Depends. I get aggravated at both.
That's what I mean.
That's for sure. But the question is, you know, like, you have to ask yourself. You know, you have to ask yourself. You know, do you trade? Do you want to trade, or you know, the euro dollar short after we've seen a move down? You know, like we've seen a 70 pip move.
Yeah.
It's a 7, just over 9.
Yeah.
Yeah. So we've seen like a 70 pip move. It's like, no, you don't. Somebody, you're giving somebody after 6-7 hours of a movement, you're giving somebody a upper hand for no reason. Okay, so and I mean, it's not like the ECB, cut rates and more into negative territory, and you're like, holy crap, this is going to go down like a couple hundred pips. If something just moves 70 pips for really no reason, there's no reason for you to be chasing it lower. So that's why it's like, okay, and it may bounce, it may not bounce, it could continue lower, but the risk here is that it does bounce. So now you got to find a place that if it bounces, where's a place to be short? And then that's when you start looking at like previous support levels like this. Like, if we get a bounce above 118 back to 115 or so, that's probably a decent area to be on the short side. Shorting it right here doesn't make a lot of sense. So, and that doesn't mean that the euro can go straight down either. The euro could quite possibly, the euro can go straight to 117.50. There's nothing we could do about it. But if you get in the habit of, chasing the market when it goes a certain direction, and it's surging, you get in the habit of chasing the market, you're going to get hurt. You can almost guarantee that. So for that particular reason, you want to I'd be looking for any type of bounce. Excuse me. I'm tired.
You're breaking up a little bit again today, Blake. Lagging.
Yeah, I tried to switch my connection. I did, and it obviously isn't helping very much. So anyway, you either deal with it or just flip it over to Steve. Doesn't matter to me.
Okay. All right.
So you look for like a zone of like maybe previous support, previous support over here or previous support over here, and you look for levels to be short, and you get on the short side. So, but you got to wait for some sort of bounce. That's realistically the best way versus trying to. You get very frustrated if you're chasing the market lower. But the euro is breaking down. We had a really nice setup. I mean, if yesterday we put in a pattern in play because we broke the trend line. People looking at a head and shoulder pattern. There's a lot of confluence pushing it lower. The question is, how far is the dollar going to go? And because I don't know that answer, but I'm not 100% sold on the idea that the dollar is ready to, really rally strongly. I am long the dollar. I have US dollar Mexican peso that I've been holding for several days now, which is probing some really critical resistance. I've pushed really critical resistance. I picked it up last week.
We were doing that on the Fed day, if my memory serves me correctly.
I mean, I was, but I really
traded
this position. I traded quite a bit. This position I picked up on Friday, I think, if I'm not mistaken, Thursday or Friday. I'm pretty sure it was Friday. So I mean, I've owned it since like 1780, 1778, somewhere down here.
Nice.
Yeah, and it's pushing into some really good resistance. And I'm long for a couple of reasons. Really, it's more of a risk aversion play. And if you saw yesterday, the Nasdaq broke some pretty key support. We're pushing the underside of this trend line here, but the Nasdaq is showing some weakness, and I think that the stock market, we were probing support on the S&P. You can see we're probing that 1290 level as well. And the S&P and the stock market really starts to show some weakness or risk off. The US dollar Mexican peso could be a beneficiary of it. We do have Mexican employment data, which is coming out in about 5 minutes, which, if the data print comes a little weaker due to the earthquakes in Mexico City, that could have a negative effect on the peso as well. That's just something to think about.
Your S&P chart looks like the way you have it with 90 support. If it gives away 70 as a give me, 2470, 2465. So,
and yes, we probed that area already. So yeah, I guess the key here is that we have to break through yesterday's lows.
Yeah.
Right.
Yep.
We break through yesterday's lows, and then that'll pretty much, tell me that the stock market's ready for a little bit bigger of a pullback.
And then we'll get the bond rally to sell. A better spot to short bonds if that happens.
Yes, and then the stock market, and then bonds should rally as a result. You're really what I'm looking for the S&P though is this red trend line. That's really the key for me. Where do we go from here, and where do we go once we test this? This is going to be very key support. As you can see, it's pretty far away. I mean, we're talking 24, realistically 2460 by the time we get there.
Yeah.
So it's going to be some time. I picked up a little bit of. I'm actually long and short the dollar. I actually picked a little bit of pound down here because I've been waiting for 134. I bought it like here at 134.27, I think, just a little bit. I'm starting to nibble on it because we might come down to 133 and change and be all the way down to 133. It's possible, so I don't want to overextend myself. As we're dropping, but this is one of those things where I am looking for the pound to eventually rally, but I don't want to get too aggressively long at this point because dollar is looking strong today, and I don't know how far the dollar is going to go. The dollar looked strong against a lot of currencies. You look at it against the Aussie, Kiwi. Excuse me, the Canadian is back at 124. You were talking about the Canadian go to 125, this little channel. It's possible, but we're also, the one thing that I've got to think about with this dollar Canadian here is that we're also up against this 124 level. This is the underside of a multi-year trend line, too. So that's the other, you got to, I'm wondering, can the Canadian, how far can the Canadian go here? Let me grab this line. So this line right here.
Yeah, it's right there already. is your point.
Yeah, I mean,
Yeah.
my point is we're there. You know, we might be slightly above it right now. You know, we went slightly. We're slightly above it, but it's probing. It's in the area. It's not a exact science. That's the thing about, you know, trading, as I try to explain to people. It's not exact science. So, you know, when you're looking at a multi-year trend line, the Canadian can get 50 pips above or below a trend line and still be in the quote unquote proximity of it. So it's a more of a zone, and I think this is really, really important. And also, if you haven't seen this too, this previous report from back in July too, it's all right here on 24 change. So we could get above 124. We could get a little higher. I don't know if we're gonna get all the way to 125. I think if it gets all the way to 125, I'm kind of thinking that the dollar Canadian not reverse. You know what I mean?
Yeah.
But we'll have to, you know, play it by ear. I have to look. Let me double check. Today, we don't have any Canadian data. We do have Janet Yellen speaking to, and that's important because Janet Yellen is speaking. She's got a speech titled "Inflation, Uncertainty, and Monetary Policy" at the National Association for Business Economics. You know, so it's going to be, you know, monetary policy related. Means that we could see the dollar really move based on her comments this morning, and that's in an hour and a half from now. So you know, be careful with your dollar positions going into this speech that she's got. I don't know if there's going to be a Q&A session, but she is at least delivering a speech. So anyway, yeah, that's kind of what I'm looking at right now, Dale. And there's a couple other dollar pairs that are starting to show you know, strength, and you get in like the U.S. dollar Swedish krona. The U.S. dollar Swedish krona finally broke out of this base here, and it's breaking higher. That, you know, looks obviously pretty strong. You've got the U.S. dollar Norwegian krona has not broken higher yet. It hasn't yet. It's trying. U.S. dollar Swiss franc is closing in its major resistance up here at 97.70 or whatever. That's pretty big. But, you know, like we saw yesterday, you get some risk aversion and you get some comments from North Korea, and it slams this thing down. And yesterday's word came from Korea about, you know, them pointing the finger at Trump and saying that, you know, his tweets or his comments are a declaration of war. I mean, that's scary for traders, and we're recovering right now. But in the stock market, we've come back a little bit. But, you know, these words are heating up. You know what I mean?
Yes.
Yeah, it's starting. Yeah, and unfortunately is right. I mean, it's starting to heat up, and then, you know, people start looking for safety. You know, traders find safety in the Swiss franc, the yen, and it's really unsure to me if they're going to find in the dollar. But I thing is, in my mind, is if there are acts of aggression and because militarized acts of aggression, people will buy Swiss francs, they will buy yen, they will sell emerging market currencies, they sell commodity currencies too. So, you know, your Mexican pesos of the world are going to get killed. Your Turkish liras and you know, other emerging market currencies are going to get crushed. Commodity currencies like the Aussie and the Kiwi could probably underperform, and I'm not sure how the dollar is going to react against like its European counterparts. I'm not 100% convinced that the dollar is the safe haven currency if we're the ones that are really the one are moving forward military action. I don't know.
I saw an interesting tweet. They said most nations go to war and then they become broke. because of all their expenditures, like what we did in Iraq, etc.
Yeah.
But it's a very interesting exercise for a nation that's already broke to go to war.
Right. It's it's a great point, Dale. I mean, it's not going to help our budget at all, obviously, if we. No. So I'm, like I said, I'm not 100% convinced that the dollar becomes safe haven currency, but we don't know, and it doesn't. And I think one of the dangers that you could you could be confronted with is actually is assuming something's going to happen with the dollar, especially against the European currencies like the pound, the euro, Swedish krona. Those is clear with. Like I said, I like being long the dollar because I know the peso will be sold. During a situation like that. I just don't know how the dollar is going to react in another situation. Yeah, no, we don't. So anyway, I know Steve is probably here. Steve, are you around?
Absolutely, mate. I'm here.
Yeah. Am I
Good
still?
morning, good morning, by the way.
Am I still lagging? Good morning.
At the beginning, it was worse. Yeah, you're still lagging, but it's better than it was initially.
I wonder. I've got everything going over here. It's probably why. But anyway, hey, great call on the euro yesterday on the head and shoulder pattern. The euro is getting crushed this morning.
Yeah, kudos, Steve.
Thank you. It looks good. We were monitoring that, Blake, since the end of last week. Of course, at a very cautious, in a very cautious way, because obviously nobody could doubt that the euro is in a confirmed uptrend. But the initial signs of momentum loss had started showing some time ago. Then we got this very clean head and shoulders forming. Then we got the German elections that didn't go as planned. So to me, it was that little nice retracement on Sunday night. It was a very good opportunity because the reward to risk ratio was amazing, and I think that all the elements that I just mentioned would make some of the people that were long the euro kind of skeptical. And you know how it is. You start by thinking, okay, I had a good run. Why don't I book some? And this takes one thing after the other, and might create a decent correction. Same thing with the dollar. I mean, we are seeing the first elements that we might get a start of a dollar correction, and I've already started seeing people talking about. I don't want to. We also had this conversation in the chat room. If you were there at that point, I think it was Chi that said that. I don't want to chase after the dollar. And I'm like, listen, if this confirms to be the beginning of a correction, it's still just a very, very few days. And this is a multi-month strong downtrend that we have. And a multi-month strong downtrend, if this proves to be the beginning of a correction, is not going to correct within 3 or 5 days. So, I'm giving that as an example to show that there is still an incredible amount of skepticism for the dollar, and of course I can totally understand why, which means that there is a good potential for a bigger rebound. That's what I think. I really want to see a close above 93, as I had been telling since last week, which we might get today. And I think the next stop is then 94.20. I think a daily close above 94.20 is undeniably going to point at at somewhat of a larger correction. I don't know if you have any other levels you're looking at, Blake, in the dollar index. I'm going to be showing it now, by the way.
94.
Yeah, here it is. Yeah. Yeah, so we had talked about last week as well about this inverted head and shoulders. It's still valid, but as I said, for me, we have the magnet, not good. There we go. So we also have this that we had talked about last week, the inverted head and shoulders. But as I said, for me, most importantly is to at least clear a zone, which is this one. And we also have the 50 DMA, by the way. If you look at it, the 50 DMA has been guiding very nicely the downtrend since up there. So I think, we start seeing one by one the elements. You also mentioned the USD SEC, which indeed also pointed very nicely higher and lower for the Euro USD, because the USD SEC gave us a very nice daily divergence since a long time ago, and it was one of the very, very well behaved instruments. It had this very nice descending channel. Then it actually created a parallel descending channel within the descending channel, and we're now breaking above it. For me, this was a very important zone as well, and we're now probing its highs. We're also penetrating the 50 DMA. So, I see a lot of potential for a dollar bounce from here, and I really think that we have more to go if these levels get confirmed today or tomorrow.
It's gonna be real important to listen to what Janet Yellen has to say here about
definitely. She might provide the catalyst for an acceleration.
Good.
Steve, a lot of guys that are long-term bearish dollar, when we started this process of bottoming, thought that 97, your 200-day moving average, was possible for a correction. Yeah, up there into the end of the year. And then we'll see next year. Yeah.
Why not? We are in a downtrend since the first trading day of the year. We are already at September. Actually, we're finishing September. So, many people haven't really realized it, but, this is a 9-month downtrend. I mean, you can easily get a few weeks of a correction and still remain in a downtrend, right? And nothing moves in a straight line for years and years and years and years, etc. So why not? I mean, we have everything we need here. If Yellen might even help it push it higher. Let's see. But today, as it seems, the closes today are going to be important. Today, the euro is going to close more likely than not once again below 118.50. The USD SEC is breaking out. The DXY might close above 93. The Aussie is finally accelerating below this ascending wedge. The Kiwi is breaking this channel that we were talking about since last week, and Gregor talked about it yesterday.
Steve, hey, I got to confirm that actually Janet Yellen's speech is hours from now. I thought my calendar was not adjusted to my time zone, so it is. It's hours from now, several hours from now. So
okay,
no, it's like 4 hours away. I thought it was like an hour away. I was looking at different calendars. One of the calendars is not adjusted my time zone. That's what screwed me up. So, anyway, it is today, but later on.
Okay, so in general, we see a lot of signs that the dollar might be trying to put a turn here. So that doesn't mean that we should lose we should lose the big picture. The big picture is that the dollar is bearish. I really believe that any decent correction to the dollar should provide opportunities to be short the dollar in the future. But as I said, I don't believe that a 9-month correction downtrend should or will correct within 5 days, 3 days, 6 days, 7 days. You know what I mean? I mean, we should at least get a month. That's an analogy I would expect to be healthy. Okay, so I really don't think that after we get a confirmation this week, we should have confirmation through different and plenty of pairs that the dollar might have started its correction. I don't think that people should try to fight this move immediately, because on the other hand, this is what might even fuel like a stronger reaction to the dollar if people start fighting it, since day one. I think people should be more careful in this case. Anyhow, let's have a look at a few pairs. Let me start by the Aussie and the Kiwi. First of all, because we didn't have a look at them yesterday, Gregor came on. If you remember, Dale, we talked on Friday about the Aussie USD. I explained that within the day I'm going to be short the instrument.
Right.
I wanted to see the daily close. We did close below the 79.60 level that I said is, you know, a very great confluence for me. It's this ascending wedge. It was the horizontal level that we had there. It was it was also the ascending wedge, yeah, and the horizontal level. I think, yeah, the 50 as well. I remember it was the third one. Yeah, it's the 50 DMA. So, you know, we had a triple confluence there, and for me that was a very, very important level. I didn't go all in. I only have half a position here. Probably I should have gone all in, but, you know, I wanted to see how the new week is going to start. I'm looking to add at some point in this short trade because you know, I really think that the Kiwi is now also confirming the move. We've seen two very, very strong down days already in the week, because don't forget we opened on Sunday at 73.30, which we had indicated is a critical level, and we immediately, I mean, we opened lower, we tested 73.30, and we immediately started moving lower. So I really think that we're now getting confirmation. If we close below 72.20, we have confirmation that the Kiwi is about to put a move lower once again. So I would really be looking at 0.6970 to be the next stop. Of course, nothing moves in a straight line. First, we need to clear this low, but I really think that Kiwi is confirming the move lower. So that makes me also feel good about the Aussies break. The euro, we already talked about it. I think what we didn't say about the euro is that I have a confluence of targets here, and it's the following. It's this high that we had here, which is at 116 and change, 116.16, and also the head and shoulders target, at least the way I have drawn it, is at 116.05. So within a few pips, we have a confluence here of the head and shoulders target and that high. So I think that this 116 and change is a very good downside target to be looking for right there, as I mark it now, before we look at the second target, which is the breakout level that we had at 114.50. So definitely I'm going to be offloading some of my euro if we get down there, 116.10, 116.20. And I might be keeping the other half, you know, for a test of 114.50. I'm really going to probably be looking to even reverse that trade down there. Let's see if we get down there and how we get down there, etc. But as a general thesis, I would like to buy the Euro USD at lower levels. Okay, so I might not just book my short at some point. I might even go long. Now, having to do with the cable has, you know, a very well-behaved move lower. I would also love to buy cable at 132.50 roughly, if it gives us this opportunity. It might not go all the way to there because we have this ascending channel support passing from 113.80 roughly at the moment. I don't think I'm going to be buying so soon. It might work, but I don't think I'm going to be buying so soon. I will probably be more interested just if we get down there to 132.50. Okay, so that's what I'm looking with in regard to the cable. Let's have a look at a few questions. I also want to have a look at some of the exotic currencies. I know that many people don't trade them, but the reason I want us to have a look at them is not because I believe that many people will go ahead and trade them, but I believe that very often they give us signals for plenty of things like risk, like the dollar, etc. North Korea announcement has brought in new longs in gold. If we close below 1290, my scenario for a right shoulder to 1200 into December hike is in play, in my humble view. Yes, Luca, I agree with you. Let's see your chart. This is what Luca is looking at. Yes. So for a move lower to form a right shoulder in an inverted head and shoulders formation, yes.
Nice.
Yes, that's a good view. Thought I heard 50% of pole was rule of thumb for flags, but I may be mistaken. No, Eric, you're absolutely right. High Euro USD broke down, but supported here AB equals CD. Yes, Dimitri, I agree with you. I know that from an Elliott wave perspective, somebody can easily say that, listen, this is simply an A, a B, and a C. So, you know, it might find support here and move higher. My personal gut feeling tells me that this break of this important confluence should yield more downside. It's, you know, I don't have a counter argument to what you're offering. I had measured it also and I see it, but my gut feeling tells me that this is a more important break. And
well, there are some supporting facts for your view. Record long positions,
yeah,
and euro going into a breakdown.
Yeah, but anyhow, Dimitri, I see what you're seeing. I can't offer a counter argument. It's just my gut feeling that tells me that this is a more important break that can bring more downside. And you know, I tend to follow it. Sometimes it proves me right, sometimes it proves me wrong. Euro USD 161.8, 117.72, so should see a bounce, says V. Yes, I agree, but listen, guys, I also saw it in the chat room and I also see it here in the questions. Do you notice how many people are currently looking imminently for a support in Euro USD to move higher? For me, this adds to my thesis that we're going lower. Everybody's already in the mood of buying, selling, the first rebound of the USD. I really think that this could add to an acceleration if Yellen helps today. John says LAR and the morning edge, question mark. That's for you, obviously, Dale, to answer.
Oh, yes, it's not LAR, it's face now. So 1 + 1 = 11. LAR plus ForexAnalytix equals face equals 11. That's my answer. So, you know, the strength of the morning, what used to be the morning scenario of people jumping from Blake Show and then when it was over to LAR, you guys don't have to do that anymore. So you must have been away for a while, buddy. Jared, but nice to have you back here.
A lot of people saying about Blake. Yeah, guys, Blake has an issue with his internet because his office is a little bit remotely, but he has already tried something yesterday. He's going to get that resolved, you know, one of these days. He's already working on it. Schäuble confirms finance ministry likely going to liberals in new government. Super Mario going to get a hard ride with them. Uber taper hawks, euro downside to be limited. Yes, Luca, let's first see the new government. By the way, there's a lot of speculation about what Schäuble's new role is going to be in the government. Definitely things didn't work out, you know, as they intended in these elections for this for the Merkel's party CDU. But you know, this coalition is going to be tough for Europe in general because, you know, a lot of concessions won't be easily happening. Let's first see the new government that will be formed, and we can discuss afterwards. But although I do agree that the Euro USD has limited downside, how do we view limited downside? 116 is also limited downside, right? I mean, don't forget the euro has already made a move this year from 103 and change to 120, right? I mean, going from 120 to 116 before moving higher, for example, is still very limited downside. Kiwi short looks like it's confirming. Yeah, that was for Blake, but I will answer to that. I already said it. Yes, I totally agree with you, Michael. It is confirming. Jess is asking, thank you. Simon Shore is asking about chart and sound. Probably something you need to relog. I think my charts and sound works fine. Martin, you can contact me on Skype, sorry, on Twitter about that, and we can DM. USD CAD, yes, definitely. Let's go. Let's have a look at the USD CAD, the USD NOK. We already had a look at the USD SEK. By the way, let me finish what I was saying with the USD SEK. Listen, even a limited upside, if we confirm this break of this zone, should bring USD SEK back to this channel, as you see, which is currently, let's call it 830. Okay, so I think more upside of the USD SEK. Seeing the USD CAD, the USD CAD has not confirmed, you know, the break yet, because we are now at the level testing 124, which is like, you know, a critical resistance zone. I believe that 124 should bring some kind of an initial reaction, if that is just going to prove to be, you know, like a little reaction and then another move higher before a bigger reaction lower. Okay, so what's 124? This general zone that extends from 124 to 124.50, extremely critical for the USD CAD trend. Unless we break back above it, you know, there is no basis to be bullish the pair, at least not yet. USD NOK is still weaker. I mean, it hasn't gone back to the 8 zone, which is like very critical. We can even probably redraw this correction to something like this. So it's like a broad channel here, but still isn't confirming unless USD NOK clears, you know, the 8 level. You know, not much to do, but can easily, at least until then, and as long as it holds here, can easily produce this type of a move. Okay. Okay, so that's it with USD CAD. Yeah, too many shorts. Just there's too many shorts on USD CAD. I agree 100%. I think we need to observe the EU monthly big reversal, and this is what banks look at: 6 positive months to now a negative month. What is good return for a professional forex trader at a year? Ruben, depends on the year, depends on the trader. Obviously, to begin with, having a positive return is a very big step in trading, a very big step. Many people underestimate that, believing that, you know, yeah, okay, at the very least, you know, if you're working many hours and you're above the screen, you're going to make a positive return, but that's not a given. Even if you make no return and you don't lose money, it means that you're probably on your way to profitability, because a lot of people don't even manage to have a flat year ever. Now, for a professional trader, you know, that obviously passes all these milestones, I would tell you that it depends on the year. Anything above 20% is good.
Nice, Steve. And also, you have to be patient about how long it's going to take you to get to that level.
Yes. Yes, it might take long.
Right. So, I mean, Steve, let me ask you, I asked this in interviews, how many years did it take you to make that breakthrough? The profitability?
Almost 3, but I was very conservative always. So I have to tell you, on the other hand, that even the first year I started trading, I think I lost very, very, very little money, like 7-8% of my account, I think, something like that, which wasn't bad.
Yeah, very, very manageable. You keep your drawdowns to 10%, you're a pro. And even the legends have that.
Yeah, so, you know, knock wood, as they say, but I never had a disaster happen to me.
Tap
You know what
on
I
your
mean?
head, buddy. Tap on your head.
Never had a disaster. Never blew up an account or anything else like this, or had a huge drawdown that I didn't know how to handle or whatever. But I was always, you know, conservative. Sorry, I skipped the question. The question had to do with crude. Okay, let's have a look at crude. And then I'm going to show you what I was telling you. Okay, I have a question about crude rejecting May highs. That's a question, and there are the May highs. Listen, yes, somebody can view it like that. We had already indicated that 51.50 to 52 is a very critical level. Don't forget that we went all the way to 52 from the reversal we had at 45.60. So this has already been a very strong move higher. So yes, that might be the case, but I have no reason to turn bearish crude, just because I'm seeing like a little candle here. So what I'm going to tell you is that unless it proves otherwise, and especially as long as we are above 51, I still see no reason why we shouldn't reach this more or less confluence, which is the inverted head and shoulders target at 53.07 and the 161.8 of this correction lower, which is at 53.30. So, you know, I'm not going to be turning bearish just because today is a little bit negative. 52 is an important level, so I understand why you would want to be short here. I have nothing against it. But until proven otherwise, I don't see why we shouldn't extend to 53 and change. And we see from there. But anyhow, this was a very nice move. It was very nicely communicated technically, on a technical perspective from the market.
Plus, it was a successful pattern in play to people that aren't subscribers by Gruga.
Correct.
52.
Correct. So let me see. Gold. Yes. Okay. Let's have a look at gold and a look at silver, because we had a question about silver as well. Okay. Listen. Gold and silver. First of all, we held 1290. 1290 is quite important because it belongs to this general zone, you know, of support. It's like 1300, but it also extends like down here. It's also the 50 DMA, etc. Today, we're seeing a very good reaction to the downside, which obviously doesn't look good for the bulls. But as long as we hold 1290, you know, I wouldn't jump on being short. Gold currently is torn between two elements. First of all, we have constant threats coming in, and obviously any kind of a threat, you know, for a conflict, etc., 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 is gonna get gold very nicely bid. On the other hand, we have, and it's a good opportunity to talk about it, we have the move in the bonds. Okay, Dale also showed this. So as long as the bonds don't resume the rebound, so as long as yields keep going higher, because if bonds keep dropping, they will keep going higher, that's going to be a huge headwind for gold. So having to do with gold, I have to tell you that on one hand, I wouldn't want to be short because you see what happens with North Korea. You never know what's going to happen tomorrow. The threats might escalate to the next level. But on the other hand, looking at bonds, we said it last week as well, you know, I remain bearish. And, you know, being bearish bonds and at the same time being long gold, you know, don't go well with each other. That's why I'm flat. Because currently I don't have like a strong thesis about them, because I see contradicting forces trying to pull gold in two different directions. So, you know, feeling like that, in my opinion, is absolutely okay. I just stay away from it. So I can only talk to you about levels and tell you that personally I don't want to get involved at the moment. Silver also, yesterday it created a very nice morning star formation, but today's price action is invalidating that. I can tell you that 1670 is an important, which also is this horizontal zone, but it's also the 50% fib. is a critical level. And let's see what happens from there if we test it. Obviously, this move lower does not seem to be over at the moment, but you know, as I said, two different forces are pulling here. Personally, you know, I'd rather stay flat and, you know, put my money in other kind of trades. It's absolutely okay. Now let's have a look at a few pairs which I think give us a good idea of
your chart, Steve. Love them, man. How much time do you put into every day? I know you put a lot of time into it because you're putting out research, but you know, I think a lot of people are, you know, just don't realize how much of a commitment it takes to really get good. You know, you spend hours upon hours every day, don't you?
No, not anymore.
Not anymore?
I used to spend that much, but now, you know, the eye becomes accustomed. For example,
exactly. Okay.
You've seen on the webinar, Gregor, sometimes I've given him a chart that he doesn't have Elliott wave analysis on, and he's like doing Elliott wave analysis on 2 different time frames within
on the fly
45 seconds, right?
Yeah.
But that has taken him hundreds and hundreds of hours to master, correct?
Yes.
So yeah. It's the same thing. Now I guess I'm spending around, like, I don't know, 30 to 60 minutes per day on technical analysis, but in that time I can do updates and have a look at dozens of charts, you know what I mean? Because the analysis is already there, so I just need to do little adaptations, updates, you know what I mean? But
maybe move a line, you know, to make the adjustment to what's evolving.
Drawing your fib, yeah, exactly. But you know, you get accustomed to do that a lot faster by the time, because your eye catches things, you know, on the fly. So we have been showing USD ZAR for quite some time, and I remember we had some news that we're testing back then here, and you know, the first thing I wrote, I think I wrote it on Twitter as well, is that I said that, guys, don't get enthusiastic, or it was here, something like that. We're simply in a triangle, and you know, as it seems, we have proved it at least 3 more times since. Yes, USD ZAR is within a triangle. So that tells me 2 things. First of all, that I shouldn't be involved with it at the moment, but second of all, that I should be definitely involved with it in the near future, because at some point, as you see, this price action is coiling, the triangle's range is contracting, the 50 and the 200 EMA that have come so close to each other are confirming. So at some point, we're going to see a very nice break from this triangle. So might happen even now to the upside, seeing some dollar strength coming in. And that will be a very nice trade. Okay. Also, I showed that in the chat room yesterday once again. The USD Turkish lira also found support at a very nice area, and it's showing since a rebound that in a short-term scale it looks impulsive. So this also looks to me like it could be a nice opportunity to be long at a little correction, let's say down to 347 or something like that. USD against the Singaporean dollar is also very interesting. Let me zoom out so you see. Look at this.
Nice.
It found this bottom again. It tested this very nice confluence of the descending channel and this obviously proven to be important support area, and it's now pushing higher once again. And we're currently, if you look in the short-term term, we're currently testing a very nice little area of support resistance up here. And the 50 DMA is also here. So this also starts smelling bullish. We also had, if you look at it, we also had a nice RSI divergence here. Okay, so a lot of these exotic currencies have started hinting to an upside continuation as well after, you know, big moves lower. USD MXN, I know Blake is all over it. He's trading it on a daily basis, and he's he's successfully scalping it in and out all the time, is also making a tepid, to be honest. I mean, I prefer the other ones that I showed, but it's also making an attempt to break out. As you see, we have two patterns here. First of all, it's a descending channel, which we have already broken above. Second of all, it's this horizontal area, which we're trying to break above. And third of all, it's this triangle, which today we're trying to also break above it. So, you know, for me, a daily close above 18 also opens the door here, finally, for a bigger correction higher. So, as I said at the very, very beginning when I started speaking about the dollar, you know, a lot of things here have started pointing to a bigger correction for the dollar. Do I have confirmation yet? No, but I'm getting close to that. You know what I mean? And as you see, already some of my patterns have triggered me being long the dollar. I mean, I'm long the dollar against the euro. I'm long the dollar against the Aussie. And I'm already seeing some other pairs I want to be long the dollar against. And you know what happens? Usually when I start getting one signal after the other telling me that, you know, oh, you should be long the dollar against this, long the dollar against that, long the dollar against that, you know, I start thinking.
You should probably be long the dollar.
Yeah, exactly.
So, you know, Steve, I have a great guest, and he's a countryman of yours.
Oh, yeah, he is Alexandros, yes.
Do you know Alexandros?
Not in person, although that might happen in the near future as well. I would be absolutely
anyway, between you and Stel and Alexandros, who I've known for, I don't know, about 5 years now, I think that they should change the expression of beware of Greeks bearing gifts, because you bring gifts here every day. Stelios does, and Alexandros is gonna in a minute or so. So I think that may have gone back to ancient times, but not in the trading world. What do you think?
Yeah, I'm pretty sure back then the Greeks knew nothing about trading. Financial markets weren't there.
Oh, I don't know.
They were good in other sciences.
Yes. But anyway, great analysis, and a gift every day for people that hear you and see your work. And I just wanted to quickly, since and I do see you, Alex, thank you for your patience. I just want to show people that if you're enjoying FACE, that you're really going to enjoy this, okay? So we have some great traders in here, and FACE lasts an hour and a half. This lasts all through the trading day and night. This is our private and now semi-public. We're on the Jumbotron, Stelios trading room, where Blake's in there showing charts. Everyone's showing charts. They're sharing their short-term scalps. And if you take a 6-month membership, or you've been a member for 6 months, this is something that's there for you outside of FACE after it closes. And after the interview, we close, and then you just roll in here, or you just stay in here all day. And it's you're going to see action when some people are sleeping here in the US. It's active in Asia or active in Europe. So this is a big bonus for joining ForexAnalytix. So, you know, don't forget that we have this great deal going on, and there's only a little bit more than a week left to get Elliott Wave, harmonics, basic technical candlestick, and let me just go to the offer so you see it, and then I'm going to bring Alex on right after this. So buy 1 month, get one free, buy 6 for the price of 4, 12 for the price of 8. And on these, you get the additional trading room. And with that being said, and without further ado, I'm going to bring in Alexandros. Stick around for Alex. I have an expression with Alex because of the method that he uses, and it says, stay off of his cloud. So Alex is an Ichimoku cloud guy. He's a top gun in the clouds. And thank you so much, Alexandros, for joining me again. It's kind of a reunion. I haven't interviewed you in quite a long time, and have always appreciated your work. Alex, how are you, my trading warrior brother? How's it going?
Hi, everybody. I had an accident today with my laptop, but everything is okay, and I had to set up everything from the start for the interview, but everything is okay now. Thank God we have everything in order. Nothing is going to stop us for this.
Okay.
I'm very happy.
Yeah, that's the attitude.
Yeah.
Yeah. So
thank you.
I know you're busy trading the. Oh, okay, buddy. Yeah, it's it's definitely you edified. I've watched Alex's charts for years in other trading rooms, and his charts have a great hit rate and very clean looking, not confusing looking. And Alex, I never asked you, how did you end up moving towards the Ichimoku and cloud trading? What was behind, with all the different methodologies out there, for you gravitating towards this style?
Ichimoku Clouds is one of the tools I use in order to find a trade, make a decision about the trade. I also use Elliott waves and classical technical analysis. But the main reason behind Ichimoku Clouds is back when Blake was in his Wise Trade webinars, and Euro USD was at 140. If he remembers, we sold, many people sold Euro at the highs. Blake caught the high of the Euro USD back then. And after some time, when I was looking back at Euro USD daily chart using Ichimoku Clouds, you can see how easily one could have stayed. Can you see my chart?
I see it now, yes.
Yes,
okay.
140 is right up here. Once it broke down and fell below the Ichimoku Cloud, it never broke up back again until 112. And that's only on the daily chart.
All right, so one of the features that you like about it the most is it keeps you in a runner, keeps you in a trending trade, because it never violates that cloud.
It's a tool that applying it once can give you the trend, resistance and support levels, okay? And it cannot predict the future like Elliott waves can, or the turning points. But it's very useful. And I always use it on my charts. For example, today, Euro USD, like Stelio said, is breaking down, has broken the upside channel. The bearish divergence signs are working, and the USD is lower. However, I'm not chasing it. I'm not going to sell it because I find critical support from the Ichimoku cloud on the daily chart here at 117.35. Okay.
So do you wait for the reaction off the cloud to possibly probe along,
yes.
or do you just go with it? Okay, so you want to see a good candle off the cloud to go the other way.
I like to sell, but not in this case. I prefer to sell a chart when it breaks below the cloud, or at least I have given a lower high, so my stop can be put on the last high. However, in this case, using also my other tools, I do not believe Euro USD is starting a breakdown towards 114, 115. I believe it will come back towards 121, 122.
Okay, and you think the top of the cloud is about eyeballing at 117. That's going to be a region where you might be looking for weakness to be rejected and possibly put in a good candle.
Correct. Okay. I have seen that clouds in the 4-hour chart and in the daily chart provide the most trustworthy signals, support and resistance levels.
Okay, that's it.
So if I see on the 4-hour chart a break back above the Ichimoku cloud, it will be a good sign for bulls.
Okay.
Moreover,
And, can you
according to my
describe-
Elliott wave, yes.
Yeah, can you describe, go back to the last chart for people that aren't familiar with clouds? They're going to ask one more chart on where it shows it coming into support around 117. The Euro chart, I think it was a 4-hour chart you were showing, or maybe it was a daily.
This is the daily chart where the cloud support is at 117.15.
Okay, but the cloud.
However, yes.
Go ahead. Yeah, go
However, these two indicators and this one provide support and resistance levels. For example, this one is a price movement in the past, shows that support is being tested right now. This is the price right now, but in the past. This shows that this is a support area because of price levels where price action was moving sideways here.
Right.
And this is a support area, okay? If it comes back up, the first resistance I want to see broken on a daily basis are these two lines.
What are those?
These are the 10 and the Kijun.
Okay. Okay. The question I have, Alex, the question I have, and it's for me as much. Okay, keep it there. So say we pull back to the top of the cloud about 117. Mm-hmm. Okay, so the cloud starts at 117, but it goes all the way down to the red line underneath the beginning of the cloud, at the end of the cloud. Is that the line in the sand for a bullish outlook that it cannot take out? It could go into the cloud, right?
Of course. Entering the cloud, we say that it has become a neutral on a daily basis because this is a daily chart.
Okay.
As long as price is above the cloud, trend is bullish.
Got you. All right. And the red line underneath the cloud, what's that called?
We have to.
Okay. All right.
No,
thank you.
it's just the cloud body.
So
if price is broken below the cloud, then we have very strength.
Well, you know, it's always sunny in Southern California.
The red line.
Yeah, all right. So now we understand a little bit about the clouds, and your view is that the daily is still positive until we close underneath the clouds, and then it would just shift to neutral.
Yes, I do not believe we will break below the cloud or in the cloud because already I have seen that the decline has a corrective form in Elliott waves, and I believe we have already reached the same.
Okay, so you know that's a great level because we have a lot of people short euro. All right, so people that are short euro and you're looking at Alex's cloud coming in around 1720, that'd be a great place to book it, and at minimum half. All right, go ahead, bro.
Okay, first let me say something else. There are a lot of tools out there that one can use because many people hear us, others have many years of experience, others are very new to it. There is, as you know it, and you have said it many times, there is not a single tool that will make you money on the stock market, apart from hard work, consistency, and discipline on the plan you've got. So regarding the tools, I believe they are like suits. My suit cannot look good on you or someone else because I have a different body type. It's like the tools I use for trading. The tools I use are for my personality and are good for me. Someone else might use other tools. I do not criticize any other tools. I have received a lot of criticism by people about Elliott wave theory, although I'm still learning about it, and I try to use it as best as I can. It's a difficult theory to apply and to learn.
Yes, Elliott analysts, they can get quite vocal about, oh, that's a terrible count. Oh, that's a wrong count. When there are many counts.
It's a dynamic theory because waves can change as market moves, and scenarios can change. There are a lot of scenarios and alternative scenarios working at the same time, And people, new traders do not really understand how the dynamic of the market works, and things can change from one moment to the other, and the trends can change on a blink of an eye. So we have to adapt for the market and not stay bullish euro forever or bearish euro forever. We have to adapt. If you do not adapt on the markets, you die. You lose everything. That's my...
Every day you're continually assessing new information that's coming to you through price.
Correct. Correct. Okay. I do not believe there is a better indicator of what the market thinks from price. Price and the price movement is the best indicator we have about what's going on, because it's also a discounting factor, okay?
Yes.
Everyone was expecting euro to go to parity around 105, around 106.
Yes.
Why?
You weren't. You were in my room. I remember.
You remember. Everyone did not see the higher highs and higher lows that euro was started making.
Right.
Anyway, you also know that I have been a bullish in gold since it was below
a long time ago.
$1,100, okay?
Yeah. Are you still?
Gold. Yes, I still believe gold is heading towards 1,400 and higher. And currently gold is back testing the breakout of the bearish channel that it was in for the last few days.
Yeah, I saw you tweet that breakout. Okay, so you, even though it's beneath the cloud on your 4 hour, your bias is going to.
Do you see the rejection here?
Yes. Yes.
Do you see the rejection here? That is
right.
also the same level.
Right, at the bottom of the cloud. Right. Yes. Right.
The boundaries of the cloud are resistance levels now. If we enter the cloud, the next resistance level will be the upper boundary.
Okay. So your bias overrules what you would do with the clouds right now, because we are underneath the cloud. But I bet if you go to a weekly, we're way above the clouds on a longer time frame, and maybe your long-term bias is, huh?
This is the daily chart. It all depends on the risk or profile one has.
Okay.
This one? No, this is daily.
Okay.
This is the 4 hour chart.
Oh, right.
Okay. This is the daily chart.
Okay. Yeah, way above the cloud.
It's way above the cloud. We have been rejected by the Tenkan-sen, the resistance here.
Yes.
Okay, and if we lose 1288, we are going to hit 1277 at least.
Okay.
If not 1260.
Okay.
However, if we break above 1316, I believe we are heading towards my target here, 1400, 1450.
And what was it, a measured move, an Elliott count? What gives you the, and I know you've been talking 1500 for a while, what led you to that target?
First of all, it's the extension, the equal leg of the first move in gold. The first move from the lows in November 15.
Yeah, from 1050 to wherever it went. Okay.
To 1375 after the elections.
Okay.
I believe at least an equal leg up will follow, and the target is 1450.
Okay, nice look.
Okay.
All right. What else is on your radar? I saw a tweet that you had in the yen last week that actually you were talking about something near my...
about, yes, here, up here, we're seeing triple divergence, the three-type pattern you taught me.
Okay.
Okay. Now, USD yen is making lower lows and lower highs on the 4 hour chart. So as long as price is below these highs here,
we're still okay. I'm waiting for
we can still make a sharp decline lower. I'm bearish dollar yen, looking for a move much lower.
Do you have a chart on that? Because I'm still looking at the gold.
Truth?
Yes. We're still.
I have seen charts.
Okay. Because that's very important.
I'm now seeing dollar yen.
No, I still see the
You still see
XAU
gold?
USD. Yeah, still looking at XAU. Okay, now we're looking at the yen.
Okay, now you're looking at the yen. Here is the 4-hour chart where I have seen the 3-drive pattern with the bearish divergence, lower lows, lower highs. I do not want to see it breaking above this level,
Okay.
112.55. Okay, and I want to see today's low being broken for my bearish view to come towards 104.
Okay.
We're at least 110 at first, then a bounce, and then back down.
Okay. What else is on your radar, buddy? That you want to share?
Natural gas is on my radar.
Okay.
Many commodities react very well to technicals and respect technical rules. They're not as easily manipulated as some indices. And I believe the natural gas here is a great opportunity to buy with a low risk. I expect it to at least go towards 330.
Okay. And this is based upon cloud support. It's either good or bad from here.
It's based on all of my techniques, also clouds, Elliott waves, and last but not least, because it goes with gold, is the Australian dollar. I'm a big bull here also. The Australian dollar has broken out of a triangle pattern, and I expect it to move at least towards 0.85.
Okay, and that breakout was where again? And we're in the clouds right now, just a little temporary pullback. Breakout was what, about 78?
The breakout was
ascending triangle breakout.
Yes, at 78, yes.
Okay.
We're now probably back testing the breakout, and I expect, because AUD USD is usually lagging behind gold, and as I expect gold to rise also, I expect it to follow back upside.
So you're like me. I get people, argue with me about using Aussie and gold as a correlation. They say it should be more like copper or industrial metals, but I've seen gold and Aussie move together just at different times. So you're a believer in that correlation?
I am, but I usually try to avoid correlations like USD CAD and oil has fooled us many times, and that is why I try to look each product, each pair separately.
Okay, since you brought up USD CAD, you have a view on it? Because oil's looking pretty good. Probably could pull back here, but we're also into some resistance in USD CAD. I'm wondering where your clouds are at, maybe on a daily for a position short in CAD.
Yes. On a daily, we're hitting now the Kaijun Sen. We're at resistance right now. A daily close above 123.70, 60 can bring us back to 126. However, I do not believe so, that this can happen, to tell you the truth. I believe we will sooner see a decline in the USD CAD. However, a trend remains bullish here.
Right.
Higher highs, higher lows. It's as simple as that for me, because I try not to overcomplicate my analysis. Whenever I can create a channel and see higher highs and higher lows, I try to respect it, because this is how it is in the 4 hour above the cloud.
Right.
it's in the short term. We can be at the pattern may go in the form, but it will not.
How about the 4 hour? How about the 4 hour on Canada here, Alex? Maybe the clouds come in a little lower than 26. Maybe they come in around 25 or so. You have a 4 hour on that with the clouds.
We are
and while we're going and while we're beginning to wrap things up, the best way for people to follow you, you have a website at Trade Today. Is that correct? www.tradetoday.com. And Twitter handle is at Alexandro Fontes, and that's spelled with a Y in front of the, huh?
Another Y.
Right. Don't forget the Y. Don't forget the Y. All right. So we're breaking up a little bit on the audio with you, Alex. Anything you want to wrap it with?
Oh, thank you for the opportunity. Doing excellent. Traders,
Okay, Alex. I want to thank you so much for sharing your views and talking about a method that I don't see that much in our room, and for traders in our community to consider taking a look at this and experimenting with this. And you will always be my trading warrior brother, and I hope for nothing but pips to rain down on you during this trading season in the fall. And thanks again, Alex, for being here. Appreciate it, and I'll be tweeting our interview a little later in the session. So everyone, thank Alexandros for being with us today. As I said, you don't have to be beware of Greeks bearing gifts when you have guys like Alexandro Fontes, Stelios Kontis, and Stelios Volgardis with us. So thank you very much, my trading warrior brother. Hope everyone had a good turnaround Tuesday. Enjoy the rest of the day. Remember, if you want to be part of our trading room, to sign up, because after I say goodbye to everybody, that's still going to be an ongoing thing with an exchange of ideas. So until tomorrow, everyone, don't just count your pips, count your blessings. Adios, and see you tomorrow. Thank you again, Alex.
Thank you, Dale. Bye.
Bye-bye.